Hey guys, welcome back to Sharks Academy. In today's video, I want to share with you the weekly market analysis coming into next week. So first of all, we have the dollar index, and you can clearly see that we have this week out. Okay, this will be a week out, and for traders who use week breaks as the breakout structure, this is clearly a BOS for you. And for traders who use body breaks, then this is just a reaction towards this supply zone. Right, so you know how we're going to use flip zones, right? This over here, in fact, is a reaction for a break of market structure for you to trade the flip, right? The supply flip. Otherwise, understand where could you be a potential buyer. If you want to be a buyer, you want to buy low. You want to buy potentially this level and this level. Okay, so for traders who are using this as an aggressive reaction towards the sell side, after grabbing liquidity, how can we confirm this move? Let's go down to the lower time frame. All right, if you see the 1 hour time frame, we clearly broke structure here. All right, this is a minor swing low. You can use this as a change of character. Okay, the prices are delivering bearishly on the 1 hour, and if you go down to the 4 hours time frame, you realize yes, our next demand area is potentially this entire zone. But what lies beneath this area will be trendline liquidity. Can you see all of these are liquidity areas? So clearly, if you want to be a buyer on the daily time frame, this minor low, right? This is a minor low. This minor low may in fact get ran, tapping into deeper demand areas before moving higher, right? So we go and investigate what is this wick on the daily time frame. Where did this wick come from and how did it come about? When you see prices breaking market structure here, right? Again, minor lows, right? This is a minor structure. This is the supply that caused the break over here, right? So if you were to draw this as a supply, look at how prices reacted. You see this is the reaction. Go down to the lower time frame. Now it's clearer. Remember, this is the buy to sell wick on the daily time frame, right? Can you see what prices did? Prices taps in, reacted heavily before the breakout. So now this blue zone is a demand area, right? This is a flip zone, in fact. Play around the time frames and you realize, okay, now we have a very, very nice demand area that I'm looking to buy from. So really, if I'm looking to buy, right, for the dollar index, I'm going to buy over here. And this will be used as inducement, sell side liquidity for prices to potentially tap, right? Give you a false movement because of the support over here, right? This is a support. Traders and retail traders are looking to buy over here. So if we see an engulfing candle, chances are prices are going to give you a reaction for breaking down lower. And what is this for? This is to trap more traders, right? They are trap more buyers. In the end, creating more liquidity for prices to run down, tap into the demand here, right? Before accumulating to go higher and eventually grab the highs. Okay. So over here we have the Aussie dollar and clearly broke market structure here. So now prices started to deliver bullishly, and over here we have this supply. So this supply failed to break through yet, right? You can see all of these wicks are reaction points. And in fact, we're going to see a body break, then break this level. We're going to see this move up, break structure, and then use the last sell to buy to get involved, go higher, right? Potentially into supply areas here. So let's just mark out the supply areas. This is a potential supply. You can use the entire zone. So clearly, if you want to be a seller, I want to sell over here, right? And of course, this area has been mitigated. You can see you can use the 50% if you want to, and this would be your last sell area. All right, this 50% mark. This, because ultimately the low that created the high, right, can come from here. This is the high that created the low, sorry. So if you want to be a seller, this is the last chance, right? This flip zone is potential to push prices higher, giving you a reaction, okay? Because this is already a bullish movement. This supply may not hold, right? It will give you the reaction you want to see, all right? And whether it follows through would be another thing of its own, of course. So we can expect some sort of distribution here. May not break market structure, we do not know at that point of time, right? And it doesn't matter because this is on the daily time frame. We are forming a bias, right? Ultimately, you're going down to the lower time frame, like the 15 minutes, the 30 minutes, or the 1 hour, to look for an inner range that makes sense with the entire market structure. So similar for this, right? If prices were to break this supply, okay? So now if prices were to break this area, break supply zone, takes out the high, this becomes a demand zone. But we do not just place a buy limit like this, right? We're going to wait for the 15 minutes time frame to show us the shift and trade this framework, understanding that this is bullish, right? This area over here is bullish. And we're going to use the 15 minutes range to trade into this level. So the target really is over here. Whether or not it runs the highs, of course, would be due to your trade management, right? You're going to allow some positions to run towards the highs, but that is not necessarily going to happen. Next up, we have the Euro Pound. So over here, remember we marked out this supply zone. We expected prices to deliver bearishly, okay, and ultimately clear this liquidity lows, correct? But this is a protected low. Why? Because it grabs liquidity, break market structure. So over here, yes, we are going to sell into this demand. And can you see that once prices starts to turn from here, okay, it doesn't necessarily need to break this level to tell you that supply failed, right? This is the most, or let's say, the cleanest way to tell you that supply failed, of course, right? When it breaks this level. Otherwise, go down to the lower time frame and look for clues that tells you that, okay, this demand is going to hold. How is it? Look at the 4 hours time frame. Okay, first, we have this low created a high, a low. Once it breaks this level, this is the first sign that tells you prices wants to go higher. Okay, so yes, comes back down, weeks you out. Maybe you got stopped out somewhere over here. Doesn't matter. Now prices starts to rally again. Now, we are certain that prices are going to run the highs, right? Over here, and potentially all of this will be used as liquidity points. Because the truth is that all of this supply failed to create the low, right? We want to see this supply breaking structure, then trade off them. Now, all of this supply didn't break the swing structure over here, which means to say that all of this should be ran, okay? So remove all of these drawings again. If you were to ask me where I want to be a buyer, I want to be a buyer here, okay? And over here. Why is that so? Look at this. What is this? Flip zone. Okay, prices comes back in. This supply should take out lows. Didn't happen. Right, prices taps in, reacted, break market structure. This becomes the demand that I'm interested in. Okay, let me use the order block. This is the 4 hour time frame. We have now a break of structure here. Prices comes back down. What are you going to look for? Look for the 15-minute shift in structure. That is what we are doing here in Sharks Academy. If you are, I would say, comfortable with trading the 5 minutes and the 1 minute, of course, you can be more aggressive. You can just use a 5 minutes break and a pullback to take trades higher. Okay. Otherwise, use the 3-step process. This is your 15 minutes break off. This is your 4 hours time frame, right? 4 hours is bullish. Look for the 15M shift, right? So step number 2 would be to look for S&D zones. Step number 3, 15 minutes confirmation. Once this shift, you are bullish. This is a demand zone. Look to buy over here. Place a buy limit or look for lower time frame confirmations like the 1 minute, the 30 seconds, or even the 15 seconds, okay? And of course, only use this if you understand them. This is not financial advice. Next up, Euro Yen. This is quite tricky. You can see prices did take out lows. Okay, and with this, we expect a huge or a deep retracement, which means to say all the lower levels of supply, right, aka weak hands, will not hold, right? Because we expect a deeper retracement, perhaps into some sort of supply here, or maybe the last extreme over here, right? All of these are areas to potentially sell from, which means to say these supplies shouldn't hold. Okay, so of course we can go down to the lower time frame, look for potential sells to potentially catch short-term trade ideas, right? Okay, prices comes back in, gives you a 15-minute shift. You can look for trades to run this low before tapping into some sort of demand here to go higher. All of these are possibilities. Depends on how you manage your trade. If you are more conservative and if you expect prices to go lower, you want to see demand getting taken away. You want to see this demand failing. Okay, you want to see this demand failing. You want to see prices taps in, reacts, break market structure, create the supply plate. And this tells you that supply is in control again, potentially running these lows, because ultimately, yes, over here, we still took out structure. We are going down to lower time frames, catch sells. Over here, we have the euro dollar. So do you recall that we actually marked this breakout structure here, and then prices makes its way higher, wicks out. So what does it mean to wick out? Right? Once it wicks out, it means that prices fail to break higher. It gave you a wick break, but there isn't any body break. And look what happened. Demand got ran. Okay, and this is the opposite. Now we have a wick break over here, which tells you that prices fail to break lower. This means that supply should get ran. Okay, this is basically the opposite of what we see over here. So the easiest way is to show you that supply failed, right? Because if I want to be a seller, I want to sell here. What happens if prices taps in, fail to create a lower low, instead give you some sort of reaction, break structure here, okay, break supply or break the high here, pulls back, this buy is certainly going to reach liquidity high over here, okay, and then we're going to see higher prices to be met. Next, we have the pound yen, and if I'm looking to sell, I'm definitely looking to sell here. This is the entire daily supply. It's pretty huge, right? Even if you use the 15 minutes time frame like this, you realize that this range is so deep, right? You can see 15M shifting, taps in, fail, go higher, right? Because this is a huge daily supply zone. So what can you do? Either go up to the higher time frame, like the 4 hours or the 1 hour, right? Let's say the 4 hours, and look for an actual shift like this. Then catch sells. Okay. Otherwise, refine this entire daily into 2 or 3 POIs like this. Okay, you can use this inside bar over here. Let me mark it out as red. This inside bar is of course valid. Then you go down to the lower time frames to look for supply areas like this. Okay, this is also valid. And of course, you can use the open. I would say maybe on the 15 minutes time frame. You got nothing here as well. Right, play around the time frames and you realize that you have potentially supply areas to look out for. Maybe over here. Right, this is still in the daily supply range. This counted. Okay, this is even better over here. This inside bar, just above this wick. All right, that will be used as usement. So now these are the 3 POIs that I'm probably going to work with, and then I'm going to use the 15 minutes time frame. Okay, removing this entire daily block and work with these 3 areas. So the truth is that prices can do whatever it wants, all right? Unless you want to participate in buys, you want to be a buyer up into the supplies, this is fine as well. Otherwise, look for a shift in market structure to catch sells to potentially run these lows, right? So I'm going to look for this pattern into this few POIs. Again, look at the 4-hour time frame, you realize that yes, we are reaching the end of the extreme leg. This buy up is now in the buy zone, right? We are in the discounted area. All of these supplies may not hold. And that's why we're going to see prices shifting to tell us that, okay, this demand actually failed to hold, right? If we see prices makes its move higher, fail to break structure, and we see a distribution happening, then these are signs that tells us that this demand is going to fail, okay? And with this, we're going to run lows. Over here, we have the pound dollar, and we are pretty much in a ping pong. Right, look at this. This is a supply. Prices taps in. Okay, and it's looking to break these lows, right? Because this broke market structure, we are looking to target this as our liquidity. And prices are still breaking structure. And this seems to hold unless it tells us otherwise. Okay, now it's approaching a demand. This demand broke structure here, right? Broke all of these levels as well. So we want to see prices tap in, fail to break higher, then break down in order to catch these sells, right? Otherwise, you can look to be a buyer here, of course, and look for targets around this supply area because this supply, this bearish on the daily time frame is still valid. And unless this gets taken out, we are going to be bearish over here. Okay, so yes, prices steps into supply area, starts to deliver bearishly. This doesn't mean you can't catch temporary buys. Okay, Go down to the lower time frame, look for some sort of a 4-hour shift. Can you see this created a low? It's likely to be taken out. If we see another move down that grabs liquidity, aggressive reaction that breaks this area, you are certainly going to be a buyer here, right? And this buy has a range of this. You do not necessarily need to target higher highs. You can aim for this high. And even so, when prices starts to deliver and comes back to this area, go down to the lower time frame. Look for a 15-minute shift, right? We are going to do that. Okay. Go down to the 15-minute time frame after prices breaks this 4 hours high. Look for the shift in market structure. Look for buys here. And this could easily be a 1:4. Okay. Like this. So if you were to use a deeper area, something like this, right? This is obviously fine. Otherwise, play around the time frames. Look for what you are comfortable with. Again, daily time frame over here, we are approaching a demand. This demand created inducement, right? This liquidity before a POI. Looking to grab them, shift, go higher, go lower. So do we just place sell limit orders here? We do not, because prices indeed give us a change of character here on the 4-hour time frame. We're going to see another 4 hours change of character like this. Okay, to tell us that, okay, now this demand failed to create a high. And then this should run this demand zone and eventually tap into this liquidity pool. Next, New Zealand dollar, and this is pretty much straightforward. We have a supply area here. I'm definitely going to sell only over here. This will be used as liquidity, this as well, right? You can be a buyer over here, you can see. Let's just play around, okay? Because this is hindsight after all. I'm going to be a seller. But let's take a look whether you can catch buys into the sells. This is a demand zone. Prices broke out of market structure over here. Go down to the 15 minutes. See whether we have a valid shift on the 15. Right? So not very clean, but we have this high being taken up. Right? So where is our target? This red zone. Okay, or at least this high. Which means to say we can expect prices to almost retrace into deeper areas over here. Give us another shift to catch buys into the 4 hours high over here. This high. Okay. And then ultimately trying to trade into this red POI, this red supply area to go lower. Right. We are almost going to get this liquidity pool. We can see this trend line, right? This buy side liquidity looking to move up into this area. So catch buys to grab this, tapping into this to distribute to go lower. Next, we have the USDCHF. Obviously, very ugly price action. You can see this is sideways. We do not have a clear trend. If you want to be a participant, then of course, this is the latest break of structure. We are looking for this high to be ran at this over here. So go down to the lower time frame, the 4 hours, right? And take a look. Where can we be a buyer? If I want to be a buyer, I want to buy low. I want to buy potentially over here. Okay, or over here. But understanding that all of these are liquidity, potentially, then all of a sudden this demand becomes valid. Okay, so if it isn't clean to you, as you can see on the daily time frame or the 4 hours, then just avoid trading this pair and then move on to the next pair, like what we are going to do now. Right, go down to dollar yen, and of course you can understand that, well, we have a 4 hours supply area. Can you see? This is a 4 hour supply. Prices are bearish. Started to change bullish over here. We have a sweep of liquidity, we have a break of market structure. But if I want to be a buyer, where do you want to buy from? Here, right? Potentially here or lower. So if you want to be a buyer, you want to wait for this supply to fail. And can you see this is the reaction that push higher? So now if prices pulls back, this is a risky buy, of course, because you are buying high up the range, you are buying into supply area. What you want to see is the supply failing. You want to see this push up. Then this sell move becomes the reaction to the supply before it actually breaks out. Then you can trade off this PY, whether you place a buy limit, trading off the 4 hour time frame, or look for the 3-step process to go higher. This is also potentially possible. Otherwise, if this flip fails, you understand that this demand is the extreme. This demand ultimately creates the break of structure. pulls back, this is definitely valid for buys as well. So what do you want to see if you want to be a seller? Remove all of this. This is the supply. If you want to be a seller, I want to see this demand getting taken out. It's the same thing. It's the opposite, right? Think of it as a buyer standpoint, right? If you want to be a buyer, then buy here. If this demand fails, then we are going lower. Reaction, breakout market structure, supply area, 3-step process, same thing. This is going to run towards this demand zone, okay? But understanding that this demand failed to break this high, this demand should get ran. But we're not going to aim for these lows, right? We're just going to wait for prices to tell us whether this demand wants to fail or not. Because understanding that this still sweep liquidity, break market structure, this demand has the capacity to push prices higher. And only if we see a 4 hours accumulation, right? If we see a 4 hours chop over here, then yes, this is one of the signals or the signs that tell us that this supply failed to create a lower low. Over here, we have gold, and you can see this huge wick, tips liquidity. Where do you think this is heading towards? We are definitely going to take some sort of lows, right? We're going to take this low, we're going to take this low, and potentially this low, and this support area may be targeted. We do not know. Play on the time frames, go down to the 4 hours. Look at this. We took out a short-term low, right? This is a change of character. We sweep high, we took out lows, and this is a potential supply to get involved, right? If I want to be a seller, I may potentially want to get involved here. And of course, we do not place a sell limit here. Look for confirmations to take us lower. Otherwise, we will understand that this supply is definitely valid for sells as well. So if I want to be a seller, here is valid for sells as well. All right, taking the potential short-term lows. All of these are targets. Okay, this is target. Okay, this is the target. This is target as well. This is target as well. So next up for the crypto section, this is DOTUSDT, right? This is the demand area. We have order flow. Prices created a demand, taps in, break market structure. This demand should do the same. All right, so we can almost expect a bounce from here, which it did. For those who caught this buy, congratulations. This is a lot of money, right? Otherwise, trading on a technical standpoint, this is a demand, this is a supply, and this supply should take us lower, right? But instead, we wicked out. Okay, we want to see this reaction. We want to see prices react to this, break out of this supply, and then now we are almost going to position ourselves to be a buyer every time it dips. Right? The problem with trying to buy dips is market context. What is the difference between this, right? And then prices starts to dip, right? Prices starts to fall. All of the uneducated traders or investors are going to buy here. Pull back, buy here. Pull back, buy here. Yes, they are buying dips, but can you see they are buying high up the entire range? This is overpriced, right? And then they're going to continue doing this. And for smart traders, look at this. Prices starts to tap into demand. They position themselves to be a buyer here, expecting a bounce, of course. Break out of market structure over here like this. Break out. Pull back, they buy dips. Pull back, they buy dips. Pull back, they buy dips. Can you see what is the difference between buying dips this way and this way? This is basically catching a falling knife, right? This is putting market structure into context. Buying dips when it goes higher and break structure. You are positioning yourself to be a buyer at the low of this entire range and buying the dips this way instead of buying the dips this way. So I hope this is valuable, right, for those who may not know. And of course, we are looking for this supply to fail and similarly wait for this flip zone to buy over here as our first. And then you can of course use this as your next target. This is a flip zone as well, right? Fail to create lower lows, break structure, buy demand here, same thing. Next up, we have the Bitcoin, and you can see we are on the weekly demand area. We took out highs. Ultimately, we are still trying to target these highs. If we are not so, I would say, ambitious, we are going to look for these highs to be taken out, or at least this high to be taken out. So let's go down to the daily time frame and look for ways to get involved. Yes, we took out structure here again. We have a change of character. Prices taps into demand. Can you see this taps into a 4 hours demand perfectly? Okay, again, for those who have caught this, good for you. And you can see currently we broke this high. If I want to be a buyer, I want to buy low, I want to buy potentially over here. Okay. Otherwise, if you go down to the daily time frame, you realize that this is an inside bar which serves as a supply. and now we are getting the reaction of the supply. What happens if prices comes back down, break out, takes out this high? Immediately, this could be a buy. Okay, and we are going to look for buys into these highs, of course. Go down to the weekly time frame, go down to the 4 hours, play on the time frames and look for potential targets. Okay, just position yourself to be a seller. If you want to be a seller, where do you want to sell from? If you want to be a seller at certain points like this, you're almost certainly going to get a reaction of this point. Okay. So for those who have been following us for a while now, you understand that we are always approaching the market in a 3-step process, whether or not it's on Forex, stocks, crypto, or gold. The analysis stays the same, of course, without all the fundamental backings, right? So step number 1, which is your high time frame buyers, you want to know where you are buying from. If you want to buy low, you want to sell high. You do not want to buy into a supply or sell into a demand. And step number 2, which is our S&D zones, you want to make sure that you have a reason to buy from, right? You want to have a reason to sell from, right? And step number 3 is confirmations, and that varies a lot. Of course, we have Wyckoff, we have just a change of character, we have S&D flips. All of these are potential confirmation entries that you can learn from us. And it all caters towards the kind of trader you are. If you're impatient, you can go down to the lower time frame. If you are a conservative trader, you want to use the higher time frame as well. So this is a money back guaranteed training program, which means to say that at the end of 3 months, you realize that you really didn't learn anything from us. All right, for some reason, you feel that we didn't provide any single value. We'll be refunding you back 50% of whatever that you paid for.